Good morning on this happy Friday. Happy for most people. Most people love Fridays, but as a investor slash trader, Fridays are kind of meh days because it marks the end of the trading week and the weekend coming on, and you always got to kind of put you have to put the market down at some point. You know, psychologically, for your mental health, you have to step away from the market at some point. Nah, man, I'm going to get it in 24/7. Okay, if you're that hungry or that desperate, it could relate to either your desire to further yourself in the markets, which is a great thing, or B, it's that you're so hungry and desperate that you're getting in it just to get in it, so to speak. I tend to use the weekend as a time to reset my mind, work on the mental health game, and step away from the market. I don't much care what it's doing on the weekend. I really don't. Do what you will. I'm more focused on the movements happening during the week. So I have pulled up today the S&P 500. And this is a weekly time frame we're looking at. Okay, this is what's been happening for the past few months right here. More than that, the past year. You know, this is going back from, this is the past 14 months here, so to speak, or give or take. Past 12 months. So this chart here is representing what has happened to the S&P 500 in the past year, from 4,000 all the way up to 5,600. And the past year, it's been a ripper. You know, your 401k portfolio, I'm sure, has seen a nice move up. Okay, because S&P 500 is a popular one to be generally investing in. And you're thinking to yourself, oh great, this is great. Markets are up, I'm doing wonderful. And have you prepared for any potential downside? Okay, I'm not saying it's going to go down, because as long as the machine keeps ticking, companies are going to keep reinvesting in themselves. Which is kind of, this chart kind of relates to that. I'll be honest. Because a lot of times these companies, what they do is they're making money, and they want to not be taxed on the money they make, so they just reinvest in themselves. They buy new equipment, get tax write-off. You know, the company I work for personally, they do that to death. You know, they buy property, build new buildings, buy new equipment. You know, that's where they spend most of their profits, is reinvesting in the company, just so they don't have to pay taxes. Majority of companies do that. And some companies, they invest in the markets. And just looking at the S&P 500, look at this. I mean, 1 year of just straight up. My goodness. You know, how nice is that? But eventually, somebody, not just a particular person in mind, but the market as a whole, is going to want to sell. Okay, they're going to want to sell. They're going to want to see a return on their investment. And they're going to sell. They don't care about paying taxes on the gains that they make in the market, because the gains that they make in the market is double the gains they make in business. This is how the double game of how a company can double its profits, so to speak, in a general sense. One way is in the market. They make money in their business, and then they make money by investing it in the market. What they do, they invest their profits in the market. Okay? That's their business profits. Then the market goes up because their stock keeps getting bought up by them, which keeps making the price go up because there's a high demand for the stock, so to speak, because they keep purchasing it. They're not opening up any kind of option on it or future position on it or leverage position on it. They're just traditionally buying it. So they're buying it, and the market's having to facilitate that order of selling it to them. So the price keeps going up because they just keep purchasing it over and over and over again. And when they see that their stock is, when they've doubled their money almost, when they've made a nice return, so they bought 5 million shares of their company and it's gone up 20%, okay, they now sell it. And they pay the tax on that. They would rather pay the tax on that $6 million of their profit than the original $5 million. I'm just saying, it just seems like that's how it goes, you know. But I'm just kind of putting out some crazy thoughts here. One thing to keep in mind here is that on the weekly, on the S&P, you have two possible ideas here, which we'll go over real quick. One is and I just messed that up. One is we have this tight trend line here, okay? So price has been climbing up. It had one touch here, and then it went up, and now it kind of broke the trend, you know, because it was really holding that uptrend right there, that tight uptrend, and that's tight. That's real tight. And it was holding that, and now we've broken down from it. But then, okay, the past 2 weeks, we've gone back up. But did we make another high? No. Did we break back up above that tight trend line? No. We're banging our head against the ceiling as we speak. So when you're looking at the market just in a general chart perspective and price action perspective, you're looking at it as, okay, right now, simply put, we're just hitting resistance right here. This is a demand area. Why? Or, I apologize. This is a supply area. Why? Because this is where we started to fall down from. We're revisiting that area, and it hasn't proven to us otherwise that it's going to break above that point yet. So on a long-term swing trade idea on this, not long-term, midterm I would refer to as several weeks, okay, we would be opening up a short position option on this. Why? Because it hasn't broken above yet, and it's hitting resistance. We're at our first weekly tap of a supply area. Okay, there's a lot of things that are going in our favor for price to pull down. Oddly enough, you could even pull up I hate doing this, but you could pull up a RSI. Okay. Oh, look at that. Who would have thought? I already figured it would be like that before I even pulled it up. You see what is called bearish divergence of the price going up, but the RSI is going down. Okay, the RSI is going down here. So oddly enough, that is you have a slight bearish divergence going on at the moment. So you have another factor to figure in the fact that, okay, we could be going down. But it's going up right now. It's going up right now. Well, yeah. It's not that you're going to go into heavy, but you can only play what you see. So you see you're banging your head against the ceiling. You can enter one position. And if it breaks above, great. Maybe your idea is invalidated. It's no longer valid. You come up with another game plan. But as so long as price is below 5669, I'm bearish on this. Now, what do I truly, with my third eye, mystical powers and vision really going on, is probably one of these. We wiggle up a little bit higher, keep on dragging up, and then over here somewhere, then we have that nice pullback for the win. If you're playing the down position. But there's nothing wrong with starting to enter here on getting in short on the S&P. Due to the simple fact that we are due a reset, okay? There's liquidity here, and there's a huge demand area here. I'm telling you. Alright. We done tapped this demand zone the other day. We've yet to tap this demand zone or this demand zone. So you can trade towards the demand zone. But it depends on how big of a drawdown you're willing to take on the upswing. But that's all I got for today on the S&P 500. Take your time. Trade light. Keep your risk management on point. And I will talk to everybody later. Peace.